Hi, good morning, everyone. This is Sheng Shi from Endowers, and today we have another guest with us, Dinesh from Dollars and Cents, and we'll be talking about starting your CPF millionaire journey early. So I guess some of you are our existing clients who have probably saw our email about this event and have joined through YouTube. And we also have other participants from the Seedly virtual booth. So thank you very much for joining us on your Saturday morning to learn more about CPF, right? So today's session is going to be very discussion based. So please feel free to leave your questions, your thoughts on either the YouTube chat or on the Seedly virtual booth, so that Dinesh and I can talk through some of our thinking behind it and share our perspective of things. So Dinesh, why don't you start off with a bit of self-introduction?
Hi everyone, I'm Dinesh from Dollars and Cents. Very happy to be invited by Endowers to participate at their booth event. I think we'll be going through a very interesting discussion today, how to use CPF to, maybe not everyone will become a millionaire from their CPF alone, but to start your journey in building up this pot for your retirement to your millionaire journey, including your CPF funds.
Yeah, fantastic. So I guess really what we are really trying to share today is not really just being a CPF millionaire, right? But how to grow your wealth holistically across cash, SRS, and how some of the personal considerations and trade-offs that we need to think about when it comes to growing our wealth. So okay, let me just go through quickly what some of the key points that we are covering today. Before that, let me do a bit of a disclaimer. So the session is really more of like a personal sharing, and it's meant to be educational in nature and shouldn't be seen as a financial advice. Okay, so we do have a lot of content around how to maximize your CPF, how to grow your CPF, right? So we have Lou with us talking about being a CPF millionaire, talk about how to minimize tax payment to the government legally, right, through tax hacks using CPF and SRS. We talk about why people are not maximizing their CPF. So for those of you who are on Seedly, you will see that there is, if you scroll down further, we have a list of content that are relevant to and more in-depth to the sharing that we are making today. So please feel free to read or listen in for those sessions so that you have a bit more understanding on what we are talking about today, because what we are sharing now is really more on the discussion basis rather than in-depth hacks and tips and tricks. Okay, so we are covering the importance of CPF in our financial planning journey, our personal life journey around CPF, right? So also the options for growing your CPF, and as finally the conclusion around how to really maximize our wealth, grow our wealth holistically using CPF as a cornerstone. Okay, so the importance of CPF in our financial planning journey. So Dinesh, can I just understand from you, how have you looked at managing your finances when you first started work?
Okay, so I guess for all of us in Singapore, right, when we first start work, that's when we first interact with our CPF actually. But what many of us, and probably we know at the back of our minds, is that actually CPF accounts is open at the point of birth today. So like when my kid is born, he already has a CPF account. The government already starts funding it actually in their MediSave account lah. So I think when we think about CPF, we need to think about it as, it's really from life to death, in my opinion. It's not just when we start working, but it's only at the point of starting work where we see money coming in, we plan how to use our OA to buy our house in the future. Then we start learning a little bit more about SA, into how we can plan for our retirement. So interestingly, I spoke to one of my very good friends. He's a self-employed person. So he doesn't really have to contribute to his OA and SA as a self-employed person. Just the mandatory contribution is in his MA, right, for self-employed. But he uses the OA and SA, especially the SA, for his retirement planning, because that gives him, the additional safety net. So even though he's not required to do it, he wants the additional safety net and is looked upon as something that is beneficial. I think for employees, when I first started, it just sometimes feel as though, sorry, I was going to say something that's not supposed to be said online, but you think about, how come 37% or 20% of my money is not being given to me in cash? Now I have to start building this pot that I probably won't see in a long time. But before long, you actually start using it for your housing, and before you know it, maybe you're in the final stretches of your retirement and you start using SA also.
Yeah, fantastic. So let me maybe share a bit of my personal thoughts and journey around CPF. Right. So I've always been a bit of a finance geek, which is why I am currently working with Endowers in Endowers, right? And as a content marketer. So I am the person that is really sort of the left brain person within the marketing team, right? Always thinking about how to grow my wealth, how to maximize my wealth, and even when I first started working as a fresh graduate, the first thing I thought of is, how would my wealth look like in a 5 years time or 10 years time. And at that point of time, when basically what you do is that you come up with some formulas on the spreadsheet, you drag the columns all the way to the right, and what I realized was that CPF actually grows up to be a very big part of our wealth, right? So beyond looking around, investing our CPF or maybe even transferring our CPF to our special account or topping up our CPF, one thing that we need to take note of is really to think about how to use our hard-earned money efficiently, right? So let me share some slides on that. So for us as a fresh graduate, right, let's say if you earn $3,000 in gross salary, our take-home pay will be 2,400, right? Our own contribution to CPF will be $600, and the employer's contribution to CPF will be $510, right? So what happens is that there is a huge amount of contribution into our CPF every year, and over a long period of time, you realize that this amount of money actually grow into a huge sum of investable money or money that we can use for property, money that we can transfer into special account.
Yeah.
This is something that we don't actively look at. And honestly, I only look at it because I am someone who is always trying to grow my wealth and optimize it, right? So what I realized from friends and my family as well is that they treat CPF not really as own money. And one reason for that is they don't really understand the value of CPF to some extent, right? Because a lot of it is actually automated by the government. If you look at how CPF is actually being managed and being used by us, you can see that there's three main accounts, right? There is a high yield savings account equivalent, which is your ordinary account, where you can use it for housing, insurance, investment, and education. You can also use it for your medical purposes, right? So that could be your MediSave. For your MediSave account, you can use it for your MediShield, right? And you can also use it for to pay some of your outpatient or even hospitalization expenses up to certain limits. And of course, you have your special account, which is what people of the 1M65 movement or people who are always trying to maximize their CPF would talk about, right? Doing the OA to SA transfer, doing the retirement sum top up. So this one can earn up to 5 or 6% interest, right? And it is sort of like a lock-in retirement saving plans, similar to what you can buy from a traditional financial advisor, right? So the thing about CPF is that we are conditioned not to care about it, right? So I still recall when I first started working, you think that you're earning $3,000, and when the paycheck eventually comes, you only see $2,400, right? So on day one, when you start working, you are already conditioned to not to have that CPF monies, right? So the government is actually very smart with that, right? They siphon out the money right at the start when we start working, and we don't get to see it being used. And for me, when I first started out working, what I realized was that I treated that $2,400 that I have a lot more importantly than that 600 odd dollars that have been siphoned away for me, right? And it's very natural because we see and feel that $2,400, but that thousand odd dollars from CPF contribution, I don't really try to manage it actively, right? So it is very similar to the pay yourself first concept, where we are supposed to transfer a sum of money that we're supposed to save and invest, and then spending with the rest of it. So the government has already implemented something like that for us in the form of CPF.
Correct.
Right.
Yeah, it's a great safety net for us.
So we have that idea that CPF money is not our money, and we can only withdraw it at 55 years old. So yeah, so that's my sharing around CPF. Let me just stop share. Dinesh, what do you think around growing your CPF and managing some of your property expenses and purchases around CPF? How do you think about that? The trade-offs, etc.
Yeah, so I mean, obviously, I know Endowus quite well, and I know we can invest. It's one of the only platforms that you can invest quite passively into well diversified products globally. With Endowus through your CPF OA funds, right? I think that's one perspective to trying to earn more than the 2.5% base that we earn on our OA. But personally, I also caution people to think about not just whether they should invest, but why they are investing. Do they really want to beat the 2.5%? If they do, then yes, investing is one possible proposition that they can embark on. But for me personally, I am currently waiting for my HDB BTO. And unfortunately, I think because of 2020, the government has already sent me a letter saying it's delayed by a few months, nine over months, I believe. So I'm building up my OA in response to being able to pay the down payment for my BTO. So even though I think it might make sense for me to invest, it does make sense when I crunch the figures, especially as you would know if you're doing Excels on a daily basis. So okay, the S&P in the past or other even the STI actually over the past 10 years would give you more than 2.5%, I believe. So it does make sense over the long term to invest your CPF OA, yet still hold some or retain some flexibility in withdrawing it into your OA and not locking it up in the SA. But for me, I just keep it in my OA because I want to pay my down payment first. And then maybe after that, I can think about maximizing. So it's not always about maximizing. I guess that's what I'm trying to say. You shouldn't always think about maximizing. You should think about what makes sense in the phase of life that you're in as well.
Yeah, fantastic. So that's what I think as well, right? So a lot of times we talk about like being a millionaire, being growing our wealth to be a millionaire. I think it's centered very much around an end goal. And honestly, everyone's end goal is different, right? And our financial circumstances are different. Our life stage is different, as you have pointed out. And we have to take into account our own finances before we look at what other people are doing and see how it applies to us. So for me, I'm attached, but still not married. So I don't have any property short-term or longer-term property obligations yet, right? So for me, even 4 or 5 years ago, I was looking at investing my CPF, and I didn't do the OA to SA top up because or rather OA to SA transfer, because I feel that it's very restrictive in nature. It's a one-way traffic, right? When you do that transfer, you can no longer use that CPF monies for your property. Right, and for younger folks like ourselves, I say younger folks because we are still in our early 30s, right? We don't really want to lock up our money for the longer term because we don't have that. We want to have that flexibility with our cash, or rather our CPF monies.
Yeah. No, I'm not sure whether we can say we're younger. A lot of the people at Seedly might be a bit younger than us also.
Yeah, exactly. Yeah, yeah, good point, good point. So exactly. So yeah, but I would guess that we are still youngish when it comes to looking at our entire financial journey, right? Because there's still a very, very long way to go. So on that, I really want to keep my options open. So in that sense, right, I guess it's not really so much about reaching a certain end figure, but really looking at our own financial plans in totality.
Right. I think personally, another thing I can share is that so okay, my dad is one person who probably didn't think about his CPF very much when he was maybe in my age, around his late 20s, early 30s. So he's one of those traditional guys, just work, and then he doesn't look at his CPF money as his money, like you pointed out, right? A lot of people don't see it as their own money. But when you do reach like you're 55 and you see it being transferred into your RA, when you're approaching the 65 mark, and then you realize, hey, now maybe you can start withdrawing from CPF Life, you start taking it a lot more seriously. And I think if you have that understanding or perception when you're in your early 30s or even late 20s, you can build a much more substantial nest egg to tap on when you're 65.
Fantastic. So maybe let me just share the screen again. Let me share the screen. And we just want to share some examples, right? So in the press, you can see that there are a lot of people talking about like 1M65 movement, saving your CPF, being a millionaire through your CPF. And it's, yeah, it really, everyone's journey is different. And I think beyond growing your CPF and being a CPF millionaire, I think the message that we are trying to bring across is empowerment to grow our wealth and empowerment to manage our CPF monies better, right? So these are some examples of people who have done that. So options for growing your CPF. Dinesh, I'm sure you have talked about this quite a few times in the articles that you have written in Dollars and Cents. Can you share with the audience some of the examples that you have when it comes to growing your CPF?
Okay, so personally, let me just share what I've done personally. Then maybe I think the hack sometimes when people think about hacks, they take it to the extreme. Not everyone will take their CPF growing journey to the extreme, right? So maybe one extreme that I can think of is I wrote this article about how if you contribute $400 a month to your newborn babies, because I had a baby about 1.5 years ago, so I was thinking about maybe CPF hacks for him. So I was writing this article. If you contribute $400 a month into your newborn child's account, SA, after 21 years, you just contribute $400 a month. When the child reaches 65, he will automatically have already $1 million. So you can make your child a millionaire by contributing $400 a year until he turns 21, where he becomes independent and start contributing himself. So he'll have much more than $1 million, but your contribution to him, which is $400 times 12 times 21 years, I think it's less than maybe 200,000 or around that figure. Will compound. That's the power of compounding, right? Into that $1 million after 65 years of compounding, lah. But personally, I don't think anyone or everyone takes that kind of extreme approach to maximizing CPF. So what I do personally, when I had my son, right, the government opened his CPF account, put the MA top-ups, and then you can actually use it to start paying his MediShield life premiums and even private integrated policy plans from there. But what I did was I just used my own funds because then I will let I'll let my son maximize his MA by earning that additional 1%. Whereas I don't really qualify for the additional 1% anymore because I already am over that $60,000 limit lah. So if I use mine, then I'm somehow maximizing in a way. So I think about these little small things also. It's not a huge amount, but it's just a hack, a small kind of hack to maximize our family CPF wealth. So sometimes it's not just about your individual, it's about your family CPF wealth as well. And then, yeah, another point is, my wife, my wife is a PR. I married a Hong Konger. So when she came here, obviously she started a CPF with $0. So when it came to paying for our BTO down payment, the first tranche, I just used entirely from my CPF account because she hadn't accumulated enough anyway to maximize her additional 1% of interest rates lah. So this is just some of the small things that I've been doing. Obviously, other smaller things is a yearly small top up to maybe OA to SA. I think the government is quite strongly encouraging people, and I think when we do this, I think we lost. Okay, yeah, Sheng-Shi, we lost you for a while, right?
Oh, okay.
Yeah. Okay. So yeah, I was just explaining. Yeah, I do a little bit of OA to SA transfers as well, but keeping in mind, the down payment number or sum I have to do in a few 1 or 2 years lah.
Okay, fantastic. Yeah.
So we're
okay,
talking
just
about
let me
some of
maybe take a look at the slides again.
Yeah.
Just a moment.
Yeah. I just wanted to refresh your memory. So we were on the CPF hacks and how you manage your personal CPF. So I'm wondering if you had anything to share also.
Oh yeah, exactly. So when it comes to CPF hacks, I think we talk about quite a few of around your maximizing for your family members. I thought that maybe the audience here today also want to learn more about CPF hacks from an angle of managing their own CPF monies.
Yeah.
Right. So let me just share my screen. right? There are actually quite a few options, right? The most obvious option that actually many Singaporeans and CPF members have done in 2020 is to do that CPF property refund, right? So what happens is that they transfer a big sum of their CPF monies into, or rather refund their cash monies into CPF so that it earns the 2.5% interest, right? So you can see that a lot of people do that. That they also do the retirement sum top up, right? So what happens is that they basically transfer $7,000 into their CPF SA account, and then this is subjected to a certain limit, right? And of course, they can also do the CPF MA transfer, which is basically a sum of money that, and the limit for that is $37,740 deducted by their annual CPF contribution, right? So these are some of the ways you can grow your CPF faster, right, by doing transfers. And just to take note, it's not something that you can do, you can do an unlimited sum for, right? There is a limit to it, especially if you want to get tax relief from it. So you can consider doing $50, $100 for it on an ongoing basis every year, right? So having that discipline to squirrel some money away for your retirement is actually very important.
Yeah. I think another thing that you mentioned was, refunding your money's used or OA money's used for your property. So rather than so you don't just benefit from that 2.5% interest, but you also stop the CPF interest accrued, the 2.6% interest accrual also.
Yeah, exactly, right. So actually, I have a slightly different view around how we look at accrual, right?
Yeah.
So the thing is that that accrual money is actually something that you owe yourself. So
Correct.
it's not necessarily a bad thing to owe yourself more money, but I guess it's a way for us to remind how much we are sacrificing when it comes to using our CPF for property investment,
Yeah.
right? And it's not necessarily a bad thing because after all, we all need a roof above our head. And property investment is definitely something that a very important decision that we have to make. But the thing around that is that we realize that property investment is probably not going to be give the same kind of returns as what our parents have personally experienced when they have invested in properties in Singapore in the 1970s or in the 1980s,
Yeah.
right? So you can see from some newspaper articles that Singaporeans' love of property should not drive up prices beyond majority reach, right? So this is a statement made by an MP, and he actually is trying to sort of like let Singaporeans understand that property is a social good that the government may not want people to make outsized returns on, right? And there's also studies that shows that the yield from CPF may actually surpass private homes. So there's growing doubts around how property can be a good investment. Even though over the short term we do see news around like how property valuations are growing very high. So it's very actually what happens for property is that it is one of the most important personal finance decision that we make as for ourselves or even for our family. Beyond that, we need to be very careful with that decision and then plan it in a very prudent manner.
Yeah. I think, just building on your point, right? And another, it's not really a hack, but another way to really build out your CPF is to really pay attention to your first property that you ever buy, right? If you buy a property that you can well afford, then you will give your CPF OA a chance to build the remaining balances. If you buy a property by stretching your finances, then you'll probably drain out your entire OA limits and your cash in hand also. So the opportunity cost is being able to invest or being able to have that option to invest lah.
Okay, fantastic. Yeah, so I guess this brings us back to the conclusion on and to round up our discussion today around CPF planning. So Dinesh, if you were to summarize the key takeaways for our discussion today around 1M65, 4M65, growing your CPF, what do you want to tell the audience?
I think there are several main points. So the first thing is that, CPF is definitely your own money, and you shouldn't wait until you're 55, 60 before you think about how you can draw down. You should be thinking about those kind of topics when you're early in your career, so that you can build up enough for when you're in your later years. So it's definitely your money. The second thing is you should try to build up as much as possible for rainy days that you really will never be able to foresee actually. So that includes, the hacks, but it also includes, taking into account the life stages that you're in. If you're buying a property, maybe you will manage your CPF in a different way. Whereas if you're nearing 55, 60, you may not want to really invest too much. You might want to think about, how to divest some amount and, try to keep your CPF funds within the CPF account itself into a growing proportion. So it's like you're kind of, I think Endowus uses the word like gliding option, right? Like how you kind of divest your monies gradually so that you build up your CPF pot a little bit more and then your investment pot a little bit less. So there's some certainties around it. And then thirdly, I think many Singaporeans are entranced with the whole property, how much they can earn from it. Like you mentioned, we really will never know. Then it might come again, but the chances are very much lower because, as you mentioned, we are a very much more mature economy today already. So the first property you ever invest in will probably determine how much CPF OA you will be able to start compounding from a young age. And as we all know, the more you start compounding from a younger age, the bigger you will build your CPF funds into. And lastly, I guess I just want to let everyone know that you don't just have to think about it from your own perspective. Sometimes you can maximize from like your family perspective as well.
Yeah, fantastic. If there's one message I would like the audience to take away is that small amounts, if you build it up gradually, it will become a huge amount, right? So as I was sharing at the very start, if you're earning a $3,000 salary, $1,000 actually goes into your CPF. So even if you were to take into account some of the mortgage deductions that are done on a monthly basis, what happens is that that amount builds up to be a huge amount of money over a long period of time, right? So for us, especially for illiquid money that we can use to that will eventually fund our retirement, I think we need to be a bit more proactive with it. And that could be done through investing your CPF monies with Endowus, preferably, or you can think of doing an OA to SA transfer. But really the key message we want people, the audience to take from our sharing is that take ownership of the CPF, right? If the government gives you money, do you take it? You definitely take it, right? So think about, read the Dollars and Cents article, head over to Endowus Insights, find out ways that you can maximize and grow your CPF while taking into account your personal financial considerations. To me, as a gamer to some extent, right, I find that this is something like a game, right, where I'm trying to really get the best outcome for myself. And once you have a more positive attitude towards managing your finances, is actually very empowering and very encouraging to see your wealth grow and see how you are putting the pieces in place for yourself and for your family.
Yeah, I think that's great sharing. Maybe one parting note from me is
Dinesh, do you have any other points to add?
Yeah, I was going to say one heartening point I wanted to add was that, whenever I do read the CPF annual report sometimes, I'm not sure people know it exists. But
Okay.
it shows that more and more people are actually contributing to their CPF each year, especially in the recent years. So that's quite heartening.
Fantastic. Okay, so I'm just going to take a look at the chats and see if there's any question. Yeah, I think Benjamin King was asking about how about parents with small children, right? So just to share, you can definitely contribute cash to your child's CPF account, right, to help them grow it as per what Dinesh has shared. And also, but of course, definitely you have to take care of the family immediate cash needs even before you consider doing something as long term as contributing to your child's CPF. Thank you
Yeah.
for your question, Benjamin.
I also want to add one thing to that note actually. When you contribute to your child's CPF account, you don't actually get to maximize your tax breaks, because that's only to yourself and maybe your parents. To your child, you don't really get the $7,000 tax deductions.
Okay, fantastic. So if you have any other questions, please feel free to drop us a note on support@endowers.com, on the YouTube chat, or on the Steely booth. Dinesh, do you have any other things to add?
I don't have much to add. I think maybe there were more questions, we could address them. So if anyone has like questions, this will be a great time to ask. Sheng is really, like he mentioned, he uses Excel sheets to maximize his CPF portfolio. So he's someone that you really want to ask questions to.
Yeah.
Okay, maybe
guess,
I ask you a question. Like, how do you think about how much of your OA to invest? Do you invest everything? Do you keep aside some of the things for maybe your house down payment? Maybe you're not sure when it's coming, that's why you're keeping a smaller amount. How do you think about it?
This is an extremely personal question. So I hope that whatever I shared, people don't take it at face value, and to be prescriptive, right? So for me, all along, I look at property investment as I don't look at property as an investment, but I view it as a unnecessary expense that I need to take.
Okay.
Right. So that makes me a bit more measured in how much I want to spend for property. Right. So I'm not looking at even for someone that has been working for 6 to 7 years, and squandered a fairly big amount of money that can make a down payment for a condo, right? On my own, I definitely would not consider that as a priority at all. So for me, I look at saving up my CPF uh, for property as something that will there's something longer term, right? So I have a leeway of around 1 to 2 years for me to accumulate my CPF OA monies before I make that commitment with my partner. So in that sense, I invest all my CPF OA for now with Endowers definitely, and I don't do any OA to SA transfer. And definitely when I make that commitment with my partner to buy a BTO, then or maybe buy a resale flat, then I will start saving that money. So in that sense, maybe two takeaways for the audience is that number one, you need to be able to size up your expenses from a 2 to 3 year perspective, right? Because if you gonna keep things open ended with your partner, you don't know what you want when it comes to your property purchase, then you are more likely than not trying to keep a lot of cash in your OA, right? So that's one consideration. And number two, have that awkward conversation with your partner, right? Because if you are not, you don't even try to measure up or try to size them up in terms of how they look at property investment and finance matters, then it becomes very difficult. And often, for guys like myself who are a lot more proactive when it comes to managing money, I will end up being the one that's saving up all the cash because maybe she doesn't have. I'll be worried that she doesn't have it on her end. So it's important to have that awkward conversation with your partner. Number one. Number two, you have to plan 2 to 3 years ahead.
Yeah, no, that's a very good point, right? If you have that conversation, at least both of you are working in the same direction, and there's no, I don't call it wastage, but there's no wastage of effort in keeping more cash than necessary.
Fantastic. Dinesh, any other last questions or points that you want to bring up?
Maybe you can discuss questions. So I guess the audience, I'm not really seeing a lot of questions. Maybe I can't see them, but the audience members are a little bit shy. Maybe we can ask ourselves a little bit of questions into how we manage our personal CPF finances so they can learn a little bit about it also. So another question I wanted to ask you was, okay, we talked a lot about like maybe our SA and OA already. What about when it comes to your MA? Do you kind of pay for your insurance in cash or to maximize your MA funds, or do you just use your MA to pay for the insurance policies?
So this is a small hack that I have that may not be applicable to everyone. So what happens is that endowers pay for my hospitalization insurance, right?
Okay.
So what I do was that I actually pay my hospitalization insurance using my MA. Then I claim for it in cash. Then I top up my MA.
Okay.
So this is how I try. I get tax relief from it as well as not paying for it. So this is a kind of a roundabout way to do it, right? So some people will just, yeah, I know the company is paying for it. I pay in cash. I claim in cash, right? But what I did was to claim in MA and I top up in MA.
Okay. Yeah, that's a pretty good hack. Yeah, so a lot of other friends that I have also, especially if they are attuned into the whole CPF maximizing game, they will, say things like, instead of paying for your insurance policies in your MA balances, you just pay for it in cash, then you let your MA compound a little bit more. And also, another hack or another thing that we think about is paying for your home, right? If you buy a less expensive home, I feel that this also gives you another option for maybe having the flexibility of in the future having one spouse stay at home to take care of the children. So if you maximize and stretch your finances too much, then you will realize that both of you need to work forever to pay off the housing loan. But if you kind of take it in a perspective that, from day one, if just one of our CPF contributions can afford the monthly installments, then we have the option. Maybe you might not ever trigger it, but you have the option of one person maybe going to stay at home and take care of the children when the time comes. And then building on that, I think if you pay for you have to pay for your monthly property mortgage as well, right? So if you can use part of your CPF and then use part of your cash to do it, that also gives you a little bit more runway to let your CPF funds grow versus feeling a little bit more pinch as well. Instead of thinking you don't need to fork out anything in cash, your CPF will just take care of the mortgage. Yeah, so these are just smaller things to like maybe use cash to pay for some of these things that you just let your CPF pay for.
Okay, fantastic. I think we have shared a lot today. Thank you, Dinesh, for taking your Saturday morning with us. For those of you on YouTube or on the Silly booth, thank you for joining us again. Right, I see that there are a lot of questions. I'll be answering them personally later on. And really, if you have, we are very shortly going to have another session with the endowers advisors. So please stay tuned for that and see you later on. Bye bye.
All right, see ya.